Today, we are addressing a crucial aspect of financial planning: income protection insurance in Singapore. My name is Jasmine.
And my name is Sean.
In an unpredictable job market, understanding how to safeguard your income is more important than ever.
Income protection insurance, also known as disability income insurance, provides a regular payout to cover your loss of income if you are unable to work due to illness or injury. Unlike critical illness insurance, which offers a lump sum upon diagnosis, income protection ensures a steady income stream during your recovery period.
Most companies offer disability income plans with monthly payments of up to 75% of your existing income if you are unable to work due to a disability. It also includes partial disability benefits and rehabilitation support.
Why do you even need income protection then? In Singapore, while CPF provides some support, it might be insufficient to cover all your expenses during a period of income loss. Income protection insurance fills this gap, ensuring you can maintain your lifestyle and meet financial obligations. Wouldn't it be exhausting to struggle financially while you are physically unwell? Consider this. If you are the sole breadwinner and suddenly unable to work due to an accident, how would you cover your mortgage, children's education, or even daily expenses? Income protection insurance provides the safety net so that you can focus on recovery.
And next up, key features to consider when it comes to income protection policies. You have to pay attention to, firstly, the coverage amount. Typically, policies cover between 50 to 80% of your income. This value would differ depending on your chosen policy, but it is good practice to know your monthly expenses as well as your needs so that you can evaluate if the coverage provided by the policy is sufficient for you and your family to live a comfortable life during your recovery. The extent of your injuries can vary and be unpredictable, so consider if the coverage is sufficient for you, even if you have a long recovery period of many years. Next, a waiting period, also known as an elimination period. The time between becoming unable to work and when you start receiving these benefits. This period can range from a few weeks to several months, depending on your particular policy. However, policies with longer waiting periods usually also have lower premiums. This is an important condition to consider before you buy your income protection scheme, as you have to evaluate if you have sufficient funds to tide through the waiting period before you start receiving the benefits.
Next up, the benefit period. The benefit period basically means the duration you'll receive payouts, which can range from 2 years or up to age 65. Income protection schemes comes with different benefit periods. Short-term income protection schemes, they are normally up to 2 years, whereas long-term income protection schemes, which are more suitable for those who are recovering from more serious injuries and longer-lasting disabilities, as they offer extended coverage, sometimes even up to retirement age. Group income protection schemes. This type of scheme is often used by companies for their employees. Group income protection schemes cover a group of employees within the organization, and the coverage is usually a percentage of the employee's pay. The premiums are also likely to be lower than those of individual income as well.
Next up, mortgage payment protection insurance. This scheme is specially meant for mortgage payment coverage in the event that the owner is not able to work, and helps them maintain their payments and upkeep of their homes.
Premium waivers. Some policies waive premiums while you're receiving benefits. For premium waiver, this is sometimes offered as an additional optional rider that you can choose to have it in your main plan. So, like mentioned so many times, insurance is something that is not a one-size-fits-all. So, do consult your preferred financial advisor or insurance agent when you are planning for your disability income insurance as well.
Now to the most important part, calculating your coverage needs. First, you have to assess your monthly expenses. Calculate your essential monthly expenses, including housing, food, utilities, and education. In the scenario that you do unfortunately fall severely ill or get injured and require rehabilitation, you would likely already have to cut back on your expenses to an extent. But you cannot neglect your essential needs, especially if you are the sole breadwinner of your family. Use your monthly expenses as a guide to determine your ideal coverage percentage or the percentage of income you need to replace to cover all your expenses.
You can also utilize online calculators that can be easily found on the different insurance websites where they can actually assist you to calculate how much do you actually need, because different insurers do offer their own customizable calculator for you to key in your income and your expenses, and from there you will know how much coverage do you actually need.
Bear in mind that's just an estimate. Next, choosing the right policy. What works for some may not work for others. Unless your policy has premium waivers, policyholders need to pay recurring premiums to keep their coverage. Age, health, occupation, and your selected coverage level plays a part in the premiums you have to pay. Choose a policy that is well-rounded and balanced enough in the areas of coverage, payout amount, premiums, waiting period, etc. Even if you come across a policy with amazing coverage, if the premiums are not affordable for you in the long term, it will just add more to your financial stress, which is the opposite of what income protection schemes are for. You also have to understand exclusions. You have to be aware of any conditions or situations which are not covered. Consider if you're predisposed to certain illnesses, and even consider your line of work and lifestyle to weigh the risk of attaining certain injuries. For example, if you work in construction sites and operate heavy machinery, you may be at a higher risk of severe injuries from on-site accidents and malfunctions as compared to someone that works a remote desk job at home. So if you are at a higher risk of certain illnesses or severe injuries, please ensure that your plan covers them.
Most importantly, consult a financial advisor. Seek professional advice to tailor a plan to your specific needs. Buying insurance can feel very scary, especially when you have to think about all the unpredictable risks that can happen to you. Consulting a financial advisor or insurance agent who would have a better understanding of the policies can help clarify your doubts and ease your worries. It is always better to ask and be safe than sorry. Thank you for watching this episode of Sean Talks. If you found this information helpful, please like, share, and subscribe for more insights on financial planning in Singapore. Any questions or topics that you would like us to cover, do drop us a comment below. My name is Sean.
And my name is Jasmine.
Stay financially savvy, and I will see you in the next video.